This divergence trading strategy combines a special version of the MACD and multi-time frame analysis to find precise buy and sell signals. In this video, I will show you guys the strategy step by step, how to change the MACD settings correctly and the buy and sell signals. So step number one for this strategy is to open up a clean chart in TradingView. Right now I'm looking at the Euro US dollar on the 4-hour and the 1-hour time frame. And yes guys, for this trading strategy we need to use 2 time frames. To look at multiple time frames in TradingView, we need to navigate up here to the upper right corner and press this button right here. And you can see that we have tons of different options, but for this strategy we only need 2 time frames. So you can choose either this one or this one right here. I highly prefer to have the charts next to each other like this. And I'm currently trading forex, but you can use this strategy trading crypto and stocks as well. Now we are ready to set up our MACD indicator, and you want to make sure that you use the MACD on the longer term time frame. So I make sure to choose the 4-hour time frame right here, and then we navigate up here to the indicators tab. And what we want to do here is that we want to simply search for the normal MACD indicator. We want to go down here and choose the built-in MACD. But now we're going to change the settings of the MACD. And this is very important, so make sure to pay attention. What you do here, you simply go down to the bottom left corner here where it says MACD. You press on the settings tab right here. Then we want to go up here and navigate to the inputs tab. And the settings we're going to use here is recommended by many professional traders such as Linda Bradford and Adam Grimes. And you want to make sure, first you want to go to the fast length here, and you actually want to change the fast length all the way down to 3. You want to go down and you also want to change the slow length down to 10. The source here you can keep at close. Some traders prefer the OHLC4, but I'm gonna keep the close for the source here. And as for the signal smoothing, we're actually gonna increase the signal smoothing to 16. The oscillator type, you can see the standard here is that we use an EMA, but we want to use an SMA both for the oscillator MA, and we also want to use an SMA for the signal line as well. And now guys, we're almost done, but we want to head over here to the style tab, and for this strategy we actually want to uncheck the histogram, uncheck the signal line, because we don't really need the signal line here. We only use the MACD line, and the standard color, this is something you can do. The standard color is blue. I like to change this one to white. Increase the thickness a bit here. If you want to, you can also uncheck the 0 line, but now we're ready to press OK. So now, in order to identify our buy signal, we need to follow 2 steps. On the longer term time frame, what we want to look out for here is that we want to see either a clear lower low or a clear higher high. In this case, you can see that we are in a downtrend, so what we're looking out for here is one low and then a lower low. And at the same time, when we see this lower low, what we want to see the MACD do is that we want the MACD to print one low and then a higher low. So we want the price to go in one direction, and we want our special MACD here to go in the other direction. Or in other words, a MACD divergence. A MACD divergence indicates a potential reversal to the upside. Now the next step is that we want to zoom in on the shorter time frame. So as you can see, this part on the 4-hour time frame is basically this whole part on the 1-hour time frame. And the reason why we zoom into the shorter term time frames is so that we can find a more precise buy signal. And what we want to look out for here is a specific chart pattern. The patterns you want to look out for are double bottoms, falling wedges, even inverse head and shoulders, or another bullish reversal pattern. In our case, you can see that the price prints one high and then a lower high. The price also prints consecutive lower lows. But the range here is getting tighter and tighter. So here we have a falling wedge. What I look out for here to get the entry signal is not only to break the falling wedge pattern, but what I also want to see here is a break of the most recent high. Or in other words, a minor change of character. And we can see that the candlestick that broke the most recent high was this one right here. So we can enter the long position at the candle close of that candle. A common way to set your stop loss is to look at the lowest point of the falling wedge. You can see the lowest point is down here. And using a risk to reward ratio of 2, your trade would have looked something like this. And on the 4-hour time frame, your trading time frame, the trade would have looked something like this.